Welcome to the deep dive analysis of Anlon Healthcare IPO 2025. Founded in 2013 and headquartered in Rajkot, Gujarat, the company manufactures active pharmaceutical ingredients and intermediates. Current installed capacity is 400 metric tons per annum, expanding to 1,100 metric tons. Key certifications include ANVISA Brazil, PMDA Japan, NMPA China, WOGMP, and ISO 9001/2015. IPO timeline and parties. The IPO opens on 26 August 2025 and closes on 29 August. Allotment will be finalized on 1 September. Refunds and credit to demat accounts on 2 September. Listing on 3 September on NSE and BSE main board. Lead manager is Interactive Financial Services, with Caffeine Technologies as registrar. Offer structure and pricing. The issue size is 121 crore rupees, entirely a fresh issue of 1.33 crore shares. Price band, 86 rupee to 91 rupees. Face value, 10 rupee per share. Lot size, 164 shares, minimum investment around 14,000 rupees. Retail investors can apply up to 13 lots, or nearly 1.95 lakh rupees. Allocation, 75% to QIBs. 15% to NIIs and 10% to retail investors. Objects of the issue. Proceeds will be utilized as follows: 30.7 crore rupees for new plant expansion, 5 crore rupees for debt repayment, 43.15 crore rupees for working capital. The balance towards general corporate purposes. Expansion capex and capacity. Capex breakdown: 3.2 crore rupees for civil work and 27.5 crore rupees for machinery. Total project cost, 30.7 crore rupees. Capacity expansion, from 400 metric tons to 1,100 metric tons per annum. Utilization history, 53% in FY22, 79% in FY23, and only 38% in FY24 due to a regulatory shutdown. Financial summary. Revenue stood at 57 crore rupees in FY22. 113 crore rupees in FY23 and 66 crore rupees in FY24. EBITDA margin improved to 23% in FY24. Profit after tax was 9.6 crore rupees, with a 14.5% net margin. For the first 10 months of FY25, revenue is 77 crore rupees, profit nearly 12 crore rupees. This signals strong recovery momentum. Key ratios and cash flows. Return on net worth was -7% in FY22, but improved to 46% in FY24. ROE stable at 16 to 17%. Debt to equity reduced sharply from 38 times to 3.6 times. However, operating cash flows remain negative across FY22 to FY24, reflecting working capital intensity, customers and concentration. In FY24, the company served 39 customers. The top 10 customers contributed 50 crore rupees, or 76% of total revenue. This indicates high customer concentration risk. Peer comparison. Valuation compared to peers. At the cap price, Anlon trades at only 13.6 times earnings. Peers trade at much higher multiples, Kronox at 27 times, Supriya at 50 times, and AMI Organics at nearly 198 times. Anlon's return on net worth, at 46%. Is stronger than all its peers. Shareholding. Pre-issue shareholding. Puneet Rasadia holds 46.6%. Meet Vachhani holds 23.6%, while others hold 29.7%. Promoters together control more than 70% of the company pre-issue. Key risks. Key risks include regulatory audits, which caused a 4-month shutdown in FY24. Capex execution risk on the 31 crore rupees expansion project. Working capital intensity, with negative cash flows in past years. High customer concentration, with top 10 contributing 76% of revenue. And capacity utilization volatility, which dropped from 79% to 38%. Valuation view. At the cap price of 91 rupees, the IPO is valued at only 13.6 times FY24 earnings, compared with the industry average of 30 to 40 times. Analysts such as Arihant recommend subscribe for the long term, estimating valuation around 24 times FY25 earnings. Short-term listing gains are modest, about 5 to 6%. Final verdict: subscribe for long-term growth potential.